Hi, welcome Self-Made Nation, CEO, founder, business owners to the Cash Rich Exit podcast. I'm Colleen O'Connell, wealth advisor at RBC Dominion Securities and your host. Today, we're diving into an interview with an extraordinary founder, Bobbie Racette, Cree Métis, queer entrepreneur, and first Indigenous woman in Canada to build, scale, and successfully sell a tech startup. How did I find Bobbie? Well, you guessed it, on LinkedIn. I saw a post. I'm not sure how it came up on my feed. Must have been shared by somebody in my network. This caught my attention. The post said this: Today, I share that Virtual Gurus has been acquired, allowing me to become the first Indigenous woman in Canada to build, scale, and sell her tech company. And I hope this opens the doors for many more to come. And I hope so too. Needless to say, I reached out to Bobbie right away and asked her if she would be a guest on the podcast. We're here today to learn more about how Bobbie turned a $300 idea at her kitchen table into Virtual Gurus, a multi-million-dollar inclusive talent marketplace, and how she recently exited in a values-oriented way, and how she created a platform for underrepresented talent in exclusive leadership. We're going to talk about how she scaled, how she navigated the acquisition, funding, and so much more. What it feels like to exit and what she's doing now. So stick around, listen to us have a chat. And if you're wondering about how I might be able to help you with your future cash-rich exit, then please feel free to reach out to me for your one-on-one wealth gap analysis. And also, if you have a great story, let's chat. Let's get your story out there. If you know an entrepreneur that would make a great guest, I am open to an introduction. Okay, without further ado, let's meet Bobbie. We've already been chatting, but it's time to introduce you to the Self-Made Nation here on the Cash Rich Exit podcast. Bobbie Racette, it's so great to have you here today.
Yeah, thank you so much, Colleen. It's great to be here.
I just wish I was
Mm,
capturing some of the, off the cuff conversation before we
mm,
really jumped in here. I'm not sure. I didn't know a lot about the Virtual Guru story before I saw your post on LinkedIn, and I'm not sure how I caught your post personally. Somebody in my network must have commented on it, and then I was like, wow, this is a great story. I wish I'd known about it sooner. So I think what I'd like to do is just kind of, set the scene. Uh, what what was Virtual Guru and how did you get there?
Yeah, thank you. That's so good. So Tanzi, everybody, that's actually hi. Thank you in my original language, which is Cree. I'm Bobbie Racette, and I am originally from Treaty 4, but I currently reside in Treaty 7. Virtual Gurus was essentially created by myself in 2016, 2017. And it was created as a stopgap for me to find a job because at the time I was laid off in oil and gas and nobody would hire me. An Indigenous queer woman with tattoos everywhere. And so I created it to create a job for myself. And probably about 10 months in, I had realized that, there's kind of a light bulb moment that if it provided work for me, then I could build it into a platform that could provide remote work opportunities to marginalized folks all across Canada and the US. So I set out on a mission to start raising money and I bootstrapped it to about 1.8 million in revenue. And then I was able to close money and then it built it into a full platform that did the AI matching and matched underserved talent with businesses. So some of our largest clients were like Mastercard, TELUS, BMO. And then it just scaled. COVID hit. And I closed 3 funding rounds through COVID because it was just scaling so much. And that led me to be the first Indigenous woman in Canada to close a Series A funding round. And then, the rest is history. And here I am on your podcast, which is
Yeah.
amazing.
Well, that is a brief summary. I know you've been a guest on a number of podcasts sharing the whole background story. I think it behooves us to note that it wasn't that simple. Your summary makes it sound pretty simple. You had a lot of no's before you got a yes. And that's something maybe just to take a minute to dive into. It started up in 2016, started to scale, bootstrapped. What was the timing? Just because now we're 2026. We're talking in the last weekend of February of 2026. The exit was November
2025. Yeah,
2025.
November. Yeah.
Yeah. So
Yep.
2016, you start, build up, bootstrap. At what point, how far along are you when you go to get external funding?
So I was about 1.8 million in annual revenue when I decided it was time to get funding. So I took $300 to my name and just bootstrapped it by myself by doing the phone calls, being the worker in the platform,
Mm-hmm.
and built the MVP on just me doing it. But
And that was
the
how, like, what was
no's.
the timing? What was the timing? Like how, like, was it 18 months, 24
Oh, it
months,
was
3 years?
2 years. I
2 years.
started
Okay.
raising in 2018, 2019, and I closed in 2021.
Okay.
So yeah, it took me a long time because a lot of people did say no to me. I think we have now counted more than 170 investors in just that seed round that said no to me. Now, in retrospect, Colleen, I get it. I didn't even really have a grade 8 to 12 education. I'm new to business. I call myself an accidental entrepreneur, and I was nascent, right? I'm new to it all, but I I was doing something good and I was scaling it and it was going places and I knew I could. So to get that initial first belief in you, I truly believe you still have to prove yourself. So I fully get that, but I think that I had to work twice as hard to prove myself, and so when I was able to continue that and then close the first funding round, it was 170 investors that said no in just a 1.25 million round. So it was a
Mm-hmm.
very small round.
Mm-hmm.
However, it obviously got easier when I moved on to the Series A 2 years later. That was quite significantly easier to close.
Right. Good. And so
Yeah.
along as you were building, at what point did you decide you were building within the intention that you would sell in the future, or did you?
Well, I didn't for the first, I honestly, for the first 4 or 5 years, 4 years, we'll say 4 years that I started this, I was actually building it for my own legacy. I thought this was my tell all. This was what I was going to do for the rest of my life, and eventually passed it down to my family. But as it scaled and as the technology evolved, um, then I think it was the realization was we're not going to want to keep this the more it gets. We're over 40 million revenue, and we weren't going to want to keep it because at that point that mission starts getting lost. My impact, my mission was really important to me. And so that's where the narrative shifted. And then that's essentially, I would say, in 2022, where we knew, and when I say we, me and my executive team and my board of advisors and board of directors knew that it was most likely going to be an acquisition in the works. Our first offers started coming around 2022, 2023. And so we knew it would happen sooner or later. And we were actually in the process of raising a Series B when some offers started coming on the table. And so it made it a little bit more easier to make that decision.
Right, right, right. And there was something we were talking about, I think that is pretty important to infuse in here is just, and I guess it works into your comment about the impact and, that the values-based part of it is, you had made some changes yourself in terms of what
Yeah.
your role looked like. And I
Yeah.
think that played into a little bit, what you described as founder fatigue. And I've heard this from founders that I talk to on a regular basis. I'm not a founder in the sense of a true entrepreneur because my business is run with it's an entrepreneur, but that you can easily go through stages where you your energy, just gets
Yes.
depleted. And
Mhm.
let's talk about why, you looked at making some of those changes and how that played into, um,
Yeah.
the timing of this exit for you.
Absolutely. And I was saying in our pre chat that, I don't think all too often enough founders talk about founder fatigue, decision fatigue. And I truly do think it's something that we need to embrace more. And I think it's something that we need to ensure and make sure that our support network around us, like the board of directors or investors, um, are supportive of you when you're going through those downfalls. Because I mean, it hurts a lot, especially when you are the founder and you're working hard, you're grinding every day. And I'm a work life balance type person. I like to say I've taken really good care of making sure I do work life balance. But when you get into that part of just scaling and scaling and scaling, there comes the part of, if you maybe miss a month or two of not scaling, you feel like the whole world is on your back. The pressure is unreal. And I kept reminding myself how thankful I am or I was, sorry, for being in that space,
Mhm.
being very lucky and grateful to be how I created that space for myself to get from point A to B, and then getting from the part of how do I start looking at my exits. So my board and I sat down and talked in April, May. And in May, officially, I stepped down into a president role. So still supporting my successor, who was my COO at the time, and still being there to manage the team. And we were working on closing a Series B. But then some offers started coming in, and I believe at that time it was, maybe this is the time. And so it just kind of fell on our lap. We weren't actually out trying to do the close to sell the business to get acquired, but it just happened. And it was a private equity firm based out of the US. And what they presented to us was great. They're rolling up a bunch of virtual assistants businesses that are just like us, and essentially building a much larger engine. So it worked out really well. And the due diligence and everything went a lot faster. It was about 5 months of due diligence.
That's short.
Yeah, really, and I didn't have to do a lot of the due diligence work. Of course I did have to do a lot of it, and but the CEO that took over did the majority of that. And so I was there for support, ensuring all the paperwork. I still sat on the board.
Mhm.
And so it all kind of happened in this way of, just boom, boom, boom. And all of a sudden it's like signed off and I'm exited, and it's such a different feeling.
Mhm.
Um, when I talk to a lot of people, other founders and people that I mentor, we often talk about how when your energy shows that you're ready for it, things will fall into place for you. And I started thinking, and that's really what happened. But it wasn't an easy process, and it was something that I'm happy I got to go through, because the amount that I've learned, but it felt good, but it hurt a little bit too.
Yeah, for sure, for sure.
Yeah.
Um, Actually, I'm curious about sort of more, like a couple questions that are coming to me here now, like in the
Mm-hmm.
process of the exit and the due diligence, over 5 months. It sounds like if it was compact like that, there must have been some really good, processes that you had in place,
Oh yeah.
in advance. And I guess when
Yeah.
we were talking about, you have investors, and you've got your board of advisors and so forth.
Mm-hmm.
What maybe would do you think there were anything key that you had in place that really helped that process move along smoothly? Because usually I
Yeah.
hear it's like
Yeah.
really tough.
It is tough. But what we did is at the time when we were raising the Series B, so I would have to say from December to Mayish time, we were actually focused on our Series B funding round. And I was in deep focus on that. And so we really already had our data room. I already had that going, had all the financials needed. But then we were thinking quite possibly we might even look into a dual track situation because at that time, getting an offer on the table and then still people wanted to fund the funding round of the B round, it made sense to look at a dual track and see what was going to come first. And so recognizing that, it put us into hyper focus mode on making sure that our data room had everything we possibly could have. And so when we decided on the firm that we would go with to acquire us, we essentially had a lot of those documents ready, all the resources. Okay. So it worked out really well in the case of getting that all together. But now, mind you, the poor team, because I'd stepped down as CEO, my team was they had to hold the brunt end of that workload, because I wasn't the CEO anymore, and so I didn't necessarily need to do a lot of the hard work. The hard work for me was agreeing to sell my baby, but but just there to support them physically, mentally, let them just bounce ideas off of me and being there to support, but ultimately recognition needs to go where it's due. And that is the finance team at Virtual Gurus and the entire, the team that were there. They worked day in and day out to make sure that we could move that fast. And it worked out really well because everything's signed and official in November. And it was almost so fast for me, which was interesting because it was from May to November, kind of had that window of getting used to not being a CEO. And it's taken some time because that's all I've known, right? So
for quite some time. So your finance team was well aware, working on the seed round and the possibly dual track. So they were well aware of the possibilities. Yeah. Who else knew that? Like who else on the team? So that was
the hardest part.
Yeah. How did you manage through that when you knew that this was a possibility? How did that go with conversations on your team? And did you feel like you were harboring a secret? And how did it feel to let go and make that announcement?
It was really difficult leading up because obviously the retention of your employees during, the due diligence process of an acquisition is the most key thing. You need to keep everything intact. And so for me, I'm a very, I would like to say stand-up leader. I'm very upfront with my team members. I like to tell them how it is because ultimately the culture we created at Virtual Gurus was one of honesty and one of being yourself and respect. And so I really wanted to tell them all. I'd have to say the hardest part was not being able to tell my leadership team and or anybody really. My executive leadership team knew, but they were a little bit more afraid of were they going to get cut and if I'm stepping down, what was going to happen. And so it was really difficult because all I wanted to do was tell everybody that, and so here their founder, the person that all of them come to work for, and they all love me, steps down and then all of a sudden, we're going into an acquisition. So it was probably really difficult for me because all I wanted to do was be the one that was honest about it from front to end. But ultimately, they started finding out, and of course, they'll start noticing. But you just got to keep their head in the game and keep going. And that was difficult.
So post the exit, do you have any responsibility still with Virtual Guru, or is it a complete departure?
Complete departure, yeah. So November was that the sale. haven't had anything to do with virtual gurus. Wish them well. They're going on into the company, the private equity firm out of the U.S. They roll it into North America's essentially largest virtual assistant platform, which is virtual, and they are massive. And so rolled them into them. So the staff, some staff were unfortunately laid off, and some staff were moved into the roll up. So Virtual Gurus is still rolling on its own. It's just rolled up into one big engine. And then our AI was essentially sold separately because this virtual assistant firm didn't need the AI. And so a local Calgary company actually purchased our AI platform.
Oh, that's interesting.
Yeah, so double sale.
Yeah. Okay, that's an aspect that I didn't see or notice anywhere. Okay, that's great to hear that it stayed in Canada too, because it's really fascinating. That's awesome.
Yeah.
Yeah, so that's opened the door for you to run some other projects. As we said, you're doing a lot of speaking. There's a documentary in the works. You've got a regular newsletter, the fire report. So tell us what all of this is. What's this next part of your journey?
Yeah, it's kind of funny because when I fully had exited, so in November, and Virtual Gurus is now handed off, and everybody's rolling, and life is good for everybody. I sat there thinking, I don't know if I can be bored for too long. I just really want to, I don't know, just continue building and scaling. And I wasn't sure if it was just because I needed something else or I had that kind of break. But so, tons of speaking events have been on the roster. A documentary being filmed. There'll be announcements soon, but a premiere being filmed. It'll be launched out in, I believe, Calgary. And that documentary was able to really see the rise of me and go and see my family and get to know the bigger things behind me, which has been really amazing because my parents got to be a part of it, and my family and my wife, and it's phenomenal to see how a whole production goes. I started a program called TAPWE. It's a platform. TAPWE is Cree for truth, and building a underserved founder-based platform that could help underserved founders really understand the whole logistics behind finance and funding when it comes to their companies, their startups. And essentially, it's kind of a support system for them of everything they would need. So, if you get an option sheet and you don't know what it means, not a lot of underserved folks have the resources to go and hire a lawyer. And so we're going to help them with that through the platform. It has TAPWE University connected into it. It has an AI mentor matching into it. So kind of building it as a hub to help underserved folks learn how to really scale their startups. Like everything from, how do you maintain your burn? How do you become cash flow? How do you get there? If they want to plug in any of their financials, then we can actually tell them kind of where their flag risks are and how we can help them.
Okay.
Scale, and it's going to be fully AI and automated. And
naturally, like how would it not be after Virtual Gurus was so much about the AI that you built?
Yeah, I think that's the best way to go because two-sided marketplaces and talent platforms take a lot to scale. And while this isn't a talent platform, it's more so a third-sided marketplace, right? Because we're going to have the investor platform dashboard into it, and then the founder side, and then you have your admin side. So the ultimate goal is to give people the support where they need it the most by founders who have done it. So it'll be kind of a founder-led platform. With that, I've started the Fire Report, which a lot of people read now. I'm so surprised at how it scaled to 4,000 followers with overnight, like pretty crazy. And so I'm doing a lot of thought leadership and traveling and speaking in thought leadership. My ultimate goal, though, Colleen, isn't to get fully immersed back into data and working and being a CEO again. take what I've learned from virtual gurus and apply it and hand it off type deal. But, I'm kind of enjoying relaxing a little bit.
Yeah. Well, that's
Yeah.
relaxing. I can relate to a degree. I can relate to a degree. Um, you know, um, while we can't talk about the ins and outs of the finances, but I gather that the financial reward is giving you the opportunity to have this space that you can travel and speak, and maybe there's honorariums or payment for
Yeah.
that, but it's that is you took on that all that risk. You started at the 300 and now you can give back to the community, but it seems like it's not heavy. It's
Yeah.
light, so you have that freedom that has come from that exit. Would that be
Yeah.
um,
Yeah.
appropriate
You
comment?
know, yeah, exactly. And well, the company sold, and obviously there's, it's a double sell essentially. And shares and everything. I can live comfortably for now and everything, but my speaking events and everything are all paid. Everybody that books me for in-person events are typically paying, which really does help me in a sense, and for my flights and such, except for if they're about raising awareness for Indigenous communities. I do all of those pro bono for sure. But, I'm very thankful I've been able to retire my parents. My mom,
Mm.
everything. I've been able, my partner and I just bought a brand new, park model at an RV show for our new campground lot that we just purchased. And so traveling and just bought a new house. And so, it's nice. But ultimately, it's not the money that drove me to do this.
Mm.
Yeah, I started it with $300 in my pocket. Of course, everybody dreams to be rich someday, but it wasn't about that at the end of it, coming out of it. For me, I think my success of the story and spreading the love of what I've done and why I've done it is what I need to be more accountable towards. And, those things bring me more joy in life than the money. So while I'm happy that I've, have a new life for myself, and while I'm happy that I don't have the life I used to have,
Hmm.
and I'm very thankful, I'm also very thankful for just the impact that I've created. And I
Yeah,
think
and
that makes
you're
it more
paying it
rich.
forward. Yeah, paying it forward
Yeah.
for sure.
Yeah.
Yeah.
Yeah. Yeah. It's been good. It's a lesson learned. And, my mom is here in the next room next to me, and because we're traveling right now, but and she had said to me, when you started this with $300 in your pocket, do you remember how you felt? And I was like, that's all I had. My mom was my first angel investor, and my parents and my family don't come from a lot of money, and she took her last $20,000 out of their bank account and gave it to me to start and keep
Oh,
continuing the business.
yeah.
And now, I've been able to pay that back, and so that's been nice. And I mean, obviously way more than that, but
Yes.
it's been nice. And it just reminds me that the entrepreneurship and the mission that I've created from this company is more of medicineship. And so I think when you're building something, and you're creating it to scale, you're creating it to sell, you're scaling constantly and hustling. The one thing that I always needed to remind myself is, why am I actually doing this? And for me, it was the mission. But for me, it was is really the hardship of taking $300 out of my pocket and building it into a multi-million-dollar company, and recognizing how amazing that really is. So yeah.
Yeah. And that's the thing. This podcast, when I launched it in 2018, it was actually called I'm a Millionaire. So now what? So now what?
Yeah.
That's where that so now what came from initially, was it? Because
Mm,
it's not necessarily about the money itself, but it's the
yeah.
impact you can have with it. Um,
Yeah.
and the change for you is not necessarily in that day-to-day operations hustle now. You're
Yeah.
able to continue that legacy. That's the other
Yes.
thing. Yeah.
Yes.
So,
And
so much
I,
more to come, right?
it is, and it's amazing. And I think, the best part for me is taking everything I've learned and sharing that knowledge with other young women, especially other young Indigenous women, because all I can think of is if I can do this, then so can they. And you know, I've never looked at myself as being a millionaire, but even though I am kind of a thing, it's something where I mean, it's something that is hard to look at sometimes, right? And
Mhm.
exactly that, now that I'm a millionaire, now what? But really, I've never really even asked myself that question. So interesting to think about
Yeah.
it that way.
Yeah. And
Hmm.
what we really need are more examples of people who are successful starting, building, scaling as you did.
Yeah.
Because the more examples we have, the more we can say we can do it
Hmm.
too if we're not
Yeah.
like the bros.
Yes, yes. We're
Right.
not the big tech bros, but
Yeah.
we can. And there's something that teaches you a deep down medicine that when you take it from here to there and get it there, and there's something that teaches you about life and everything. And I always tell people that even if you fail, it's okay. The other day in my Tapway newsletter, I was actually mentoring last week a young Indigenous woman that started her business and is turning into something else. And she said to me, I built this business so I could fail. And when she said that to me, it was almost like I just stopped in my tracks. And I was like,
Hmm.
what, why would you say that? And it was because she knew that it was going to fail and she knew she needed something to learn on. And now she's ready to turn her next idea. And now she's ready. And I just kept thinking, like, how encouraging is that? Like, that is courage for
Hmm.
somebody to say something like that. I haven't had essentially a business that has failed, but I don't really necessarily look at anything as failure anyway. However, hearing those words from this young 24-year-old entrepreneur, Indigenous entrepreneur, it was really big for me to hear that, especially going through, some of the thoughts I've been going through lately of being, now what? Now what do I do?
Hmm.
I don't want to be bored, but it's like I want to find passion.
Yeah.
And hearing that from her was just phenomenal.
Well, it's like real life tuition. I don't know if
Yep.
you are familiar with Tim Ferriss. He's pretty
Mm-hmm.
big. He's a pretty big name, right? He's talked about how,
Yep.
and I forget if it was on his podcast or somewhere that I read that he took a bundle of funds and he had
Mm-hmm.
a choice. He could go and like get his MBA or he could
Mm-hmm.
invest. And so he
Invest.
basically
Mm-hmm.
he instead he put it into angel
Yeah.
investing and so forth. And he thought to himself, well, if I lose it, it's not really that I've lost it. It's that I've invested in learning in real life
Yeah.
experience versus applying it to tuition. So it's
Yes.
life
It's,
tuition is what
yes.
this young entrepreneur is talking about.
It, great. And I love that you said that because I actually point towards the tuition and Tim Ferriss in my latest TAPWEAVE report yesterday that went out.
Oh, it must be
And
sitting in my
it's,
inbox.
yeah, you should read it. You're going to love it because it's
Yeah.
exactly what you just said.
Oh my gosh, that's
And that's what it is, like I'm now invested in 5 businesses as an angel investor. I never thought in my life that I would be an investor, and it feels good. And all of these 5 people that I've invested in are from underserved communities, LGBT folks, or Indigenous to Indigenous folks, and they just need a little bit of a lift up so they can try to scale and try to do what they need to do and learn and have their medicine. And so it's felt really good to give back in a way to pay forward, take my earnings and my learnings and help.
that's awesome. That's
Mm-hmm.
fantastic. So I know you're going to be sharing your story on many more platforms. I'm looking forward to seeing this documentary when it comes out and you're sharing bits and pieces on LinkedIn. Where can somebody find you if they are
Yeah.
interested in receiving the newsletter or following the rest of your journey, learning filling in the gaps from what we've talked about today?
Amazing. BobbieRacette.com. So BOBBIERACETTE.com. I book a lot of my speaking events through there. And, and just mentorship. I get a lot of people wanting to ask for mentorship or advisory, I guess, services from me. So people can come through there. My LinkedIn and everything is attached, and there might even be a swag store dropping because I always get a lot of like one-liners and people want them. So we started posting them on some clothes, and we're building it out now. Yeah, and I'm online, and I do speak at a lot of events. And
didn't I see that you posted something about an Ask Me Anything session that you were going to start to host?
Yeah. So it's you can go on my website and request to ask me and talk with me or whatever. It's actually through intro, so people can go on and request me as a mentor and advisor. And obviously, I don't have all the time in the world anymore. But people want to request time, so I've opened up certain parts of my calendar to paid advisory role positions, so people can request me to chat. And so I'm doing quite a bit of that now, about 10 a week. And so I open up 10 slots a week.
And that's all through your website?
Yep.
Awesome.
Yeah.
When I like to wrap up my podcast asking for one final piece of fun, frank advice that you'd want to leave for the Self-Made Nation, what might that be?
Fun, frank advice. Do your due diligence just as hard as people do their due diligence on you when you're raising money. Mm-hmm. You got to make sure that you are getting matched and that you're selecting the right investors for you. I think it's very key. I didn't know any of that at the beginning because, who knows that, right? When you're raising money and when I'm going through 170 no's, you kind of get to desperation because you're scaling and you need money, right? When you're in high tech mode and high scale mode. So a lot of times founders often overlook that part. And it wasn't until the second or third raise that I'd realized that I can do that and I can select the best investors for me. And I think it's surround your cap table with the people that are going to give you that advice and support you and carry you the way, because I think that is so key. I've all too often have seen a lot of my friends in startups or tech startups who have raised and they don't have anywhere near the support that they should have. And so that's something with Tapley that I want to change is how do we make sure that you're supporting them from start to end? Mm-hmm. I don't need, if I'm raising millions of dollars, like I think I've raised over like 14, 20 million for my company in total, but I don't need people to hold my hands. But I think it would be really good to make sure that you have the right people in your cap table for the times that you need, like scale advice to funding advice, financial advice to everything. And so, yeah.
That's really good advice. Same thing on the, probably the same thing on the sale too, right? Making sure that your buyer is aligned with your values so that you don't have regret.
Yeah. And it's not hard to, it's not a bad idea to. And I think all too often none of us do. And I know a lot of acquisitions when they go through, people sometimes just out of desperation or out of, okay, I'm tired. This is taking too long because it's a long process. Like I know we talked about that at the beginning, but an acquisition could take like up to 2 years, even more for it to go through. And so it takes a long time, and that's a lot of time on your plate that you don't want to waste. And the best thing to do is just to get all the information out front. Is this somebody I can work with? Is it somebody that I want to carry the torch with? Is it, I know my story is a little bit not as traditional as a regular acquisition. And I know like typically they keep the CEO and move on, but because I stepped down, the CEO went with the company. So the CEO that was my successor still took on and is still with the company. But still, even at that, you still want to make sure that your company mission is staying intact. So.
Yeah, the legacy.
Yeah. Yeah.
Well, Bobbie, it was such a pleasure to meet you and chat with you today. Thank you so much for bringing the story here to the Cash Rich Exit podcast.
Thank you so much for having me.
Bobbie's story reminds us that you can build something deeply values driven, inclusive, break barriers along the way, and still create a meaningful legacy, a cash rich exit that sets you up for whatever is going to come next for you. And you know what? I'm super excited. We're recording this on Friday, February the 27th. Bobbie shared with me after we ended the formal interview that today's podcast was the first time she dug into the sale in depth on a podcast. So I'm super happy that she accepted my invitation and we were able to do this today. Listen, if today's episode has you thinking about your own journey, whether you're at your kitchen table startup stage, you're scaling fast, or quietly eyeing your exit, I'd love to connect. Reach out to me, Colleen O'Connell-Campbell on LinkedIn, and let's explore a one-on-one wealth gap analysis to help you map out your path for your personal wealth side of things. And if this conversation resonated with you, please leave a 5-star rating and review so more CEO founder business owners, the Self-Made Nation, can find the show. And if you're watching this on YouTube, hit that subscribe button. Thank you for listening. I'm looking forward to welcoming you back again soon. I'm Colleen O'Connell-Campbell, Wealth Advisor at RBC Dominion Securities, and your host, TTFN. Ta-ta for now. One last thing before I let you go. All opinions expressed by me and any guests are solely their own and do not reflect the opinion of RBC Dominion Securities. This show is for information purposes only. Before acting on anything you hear or see, consult a qualified professional. I'm a wealth advisor with RBC Dominion Securities, a member of the Canadian Investor Protection Fund.